Right now, there's a single flashpoint on the map that's putting a secret 50-year-old economic system under a huge microscope. And it's revealing a massive potential weakness right at the heart of America's power. Today, we're going to dive into a crisis that connects a few Iranian gunboats directly to your wallet.
Okay, it all starts with this one number, 20%. Just think about that. That's the slice of the entire world's daily oil consumption that is suddenly completely at risk. We're talking about a colossal amount of energy, just poof, in jeopardy.
And here's the crazy part. All of it, every single drop of that 20% has to squeeze through this tiny, tiny sliver of water. It's a bottleneck, and it has just been slammed shut.
Yeah, we're talking about the Strait of Hormuz. And at its narrowest point, it's just 21 miles wide. I mean, think about that for a second. The fate of the entire global economy is squeezing through a channel you could probably cross on a ferry in, what, an hour? It's nuts.
So that's the big question, right? It has been shut down. This isn't a hypothetical. So what happens now? Well, the answer goes way beyond what you pay at the pump. This whole thing strikes at the very foundation of the US dollar itself.
Okay, so first things first. Let's really get a handle on the immediate crisis here. What is it about this little 21-mile stretch of water that makes it, the axis of the entire global economy?
All right, so the Strait of Hormuz, it separates Iran and Oman, and every single day, something like 20 million barrels of oil flow through it. That's nuts. It's about a quarter of all oil traded by sea. Most of it's heading to big economies in Asia like China, India, and Japan. So with Iran now shutting the strait down, we've got this incredibly tense standoff with the US. It's become a classic geopolitical powder keg, just waiting for a spark.
But here's where it gets really interesting. To understand why this is an existential threat and not just another regional conflict, we actually have to rewind the clock. Because the secret deal, one made 50 years ago, is at the very heart of this entire crisis.
So back in 1971, you had President Nixon taking the dollar off the gold standard. It basically threw global finance into complete chaos. But then, just 3 years later, his administration strikes a secret deal with Saudi Arabia to build a whole new system. And what's truly incredible is just how secret this thing was. I mean, the deal's existence wasn't even publicly confirmed until 2016. For 50 years, this arrangement was governing the world from the shadows.
And this is what they created. It's called the petrodollar system. And honestly, it's a pretty elegant loop when you think about it. Saudi Arabia, and then later other big oil-producing nations, they all agreed to sell their oil only in US dollars. And in exchange for US military protection, they'd take all those massive dollar profits and just plow them right back into buying US government debt. It's a perfect circle. Oil for dollars and dollars for debt.
And that brings us to the other side of this secret weapon. See, all that constant built-in demand for US debt, it allowed for something else. A truly staggering amount of borrowing.
$39 trillion. Let that number sink in. That's the U.S. national debt as of March 2026, a milestone that was hit just a few weeks into this very crisis with Iran. And you gotta believe, the timing here is no coincidence. The very system that made all this borrowing possible is now under direct threat.
Okay, so how this recycling loop actually works is super important. Think about it. Every nation on Earth needs oil. And to buy that oil, they need US dollars. This means the oil producers end up with just mountains of these dollars. So what do they do with them? They recycle them by buying the safest dollar asset they can find, US Treasury bonds. This creates this perfect captive market, which lets the US government borrow money at incredibly low rates.
And there's this fantastic metaphor for this whole dynamic. The economist Yanis Varoufakis, he calls it the global minotaur. It's this idea that the U.S. economy sits at the center of a labyrinth, just consuming the world's surplus capital to fund its own deficits. And it's all thanks to this petrodollar system.
And now, guess what? Iran is taking aim directly at the Minotaur. Their parliament speaker actually issued a warning that financial institutions and, get this, buyers of U.S. debt are now considered legitimate targets. So we're not just talking about ships in a strait anymore. This is a direct attack on the financial architecture that keeps the United States funded.
So this whole situation has fueled years and years of talk about something called de-dollarization. You know, the idea that the world is finally ready to dump the dollar. But the question is, are we seeing real cracks in the system, or are these just hairline fractures?
Well, if you actually look at the data, the dollar's share of central bank reserves has fallen to its lowest point since 1995. So that's a real multi-decade decline.
the competition isn't even close. The euro is a distant second, and the Chinese yuan, it's barely a blip on the radar. So for now, the dollar is still the undisputed king of the hill.
And this is a really, really important distinction we have to make. What we're seeing is an erosion of the dollar's dominance, not an exodus. There's a huge difference. The IMF looked into this and found that most of the recent decline was just due to exchange rate fluctuations. A weaker dollar making other currencies seem bigger. It's not because central banks are actively dumping their dollar holdings.
So yeah, while the dollar's position is definitely eroding a bit, there's no other currency that's even close to being a credible replacement. The network effects are just too powerful. Think about it. Traders, banks, entire global commodities markets, they're all priced in dollars. You just can't unwind a system that big overnight. It's not going to happen.
Which of course brings us right back to the Strait of Hormuz. If the system isn't really collapsing, then why does this standoff matter so much? Why is it such a big deal for the financial system?
Because the crisis is an accelerant. That's the key word here. What was a slow, almost glacial shift is now a pressing, urgent problem for a lot of countries. Every single day that strait is closed, nations that need that oil are forced to test workarounds. They have to experiment with alternative payment systems, different supply chains, all out of sheer necessity.
And that acceleration, well, it puts a very unique American advantage at risk. It's what one French finance minister famously called an exorbitant privilege.
So what does losing that privilege actually mean in the real world for you? Well, for starters, it means higher borrowing costs for the U.S. government, and that translates directly into higher interest rates on your mortgage, on your car loan. It can create this really dangerous feedback loop where rising debt costs more to finance, which just creates even more debt. And ultimately, yeah, it means a weaker America on the world stage.
So here's the bottom line. The crisis in the Strait of Hormuz isn't going to destroy the petrodollar system overnight. That's not what's happening. Instead, what it's doing is pulling back the curtain. It's taking a system that thrived for a half-century in total secret, and it's exposing its fragility for the entire world to see.
And that really just leaves us with one final big question. This whole system, this world of oil, dollars, and debt, it was all built behind closed doors. So is this crisis the moment? Is this when the world finally begins to watch it all unravel right out in the open?